Hey everyone, this is Alan from Rawlo Financial. I hope you're all well today. As you can see and probably hear, it is throwing it down here. It's not good at all. I just thought I'd do a video on what you should do if the stock market does crash. In fact, sort of when. It's probably an eventuality. You know, nothing stays up forever. So I want to talk to you a little bit about strategies that I'm going to deploy, I should say. So the first thing that I think that anybody should do, and you should do this anyway, is good practice, is you should have a watch list of what you consider really good stocks, really high quality stocks. Now, with each stock, and I've noticed this myself, if you watch it for a long time, you get an idea of how the stock fluctuates, how far it fluctuates, how it moves. So with most stocks as well, you can look at the history of a stock and you can see how it performs, even during a recession or a massive crash itself. So some of the titans, some of the really big boys, they might only crash 10%. You know, they can be steady as a rock. They only go down 10, 15%. And then you can find that some riskier stocks, they can go down, you know, 50, 60%. So, you know, just to put that into comparison, if you think that, you know, your stock, oh, there's a recession coming and my stock will get cut in half, it might never get cut in half. It might be an absolute titan. So you need to have an idea of how that stock fluctuates. So I often do this with a stock. I will monitor it for a long time. I will see, you know, on the bad days when the market goes down, say 5-10%, you know, my stock might only go down 2%. And I get an idea of, like, you know, this is a big boy, this is a juggernaut, this is not going down too low. And then you get an idea of when to buy in at. So as the crash starts to happen, you have an idea of what is a really reasonable price for that stock and what, you know, when it's cheap or when it's still expensive. So I tend to stick to those sort of rules. It's really good to keep an eye on stocks like that. I would also point out that trying to time the bottom of the market is an impossible task. You know, if it was easy, again, everybody would do it and everybody would be absolutely filthy rich, because if you time the bottom of a market, the multiples are extremely high if you can manage it. So yeah, I wouldn't try to time it. What I personally will do when the time comes is, well, it's kind of my strategy anyway, which is just average down, continue to nibble away at it. If I think the stock is at a real big discount, I will try to take bigger nibbles. That's all that I will do. I will try to deploy more money if I think that the stock market is going down substantially or to a point, you know, because as they call it, sometimes it can be like catching a falling knife. You could take a big lump sum, a big position, and the stock just keeps on falling and keeps on falling, and sometimes you don't know when the bottom is. So all you can do is, when some of the signals turn that we might be out of it, you know, things start to pick up, maybe, you know, central banks intervene, maybe unemployment steadies out, things like that. That's when you can maybe look to take quite a strong position in some of the stocks that you like. That's what I'll be doing. I do try and deploy every month, every 2 months, when I have a certain amount of money. I don't like to invest, if I can help it, low amounts of money. I would like to invest higher amounts of money, just because the platform that I'm on, if you invest, that, you know, there can be fees all the time. And so to make it worthwhile, you know, there's no point putting £300, for example, into a stock and, you know, £10-15 of that is a commission transaction fee. You know, it's kind of burning through your money. So I like to sort of minimum maybe invest seven or 800 myself. Ideally just over 1,000. That seems to be a bit more worth it then, because it's not a bad percentage that you end up paying out. But yeah, what else? Yeah, so I think the keys as well, don't panic during a recession or a depression or a stock market crash, whatever you want to sort of call it, whatever we're going through at the time that makes the stock market fall. Don't panic, you know, see it as an opportunity for you to get your hand on the table and get some really high quality assets at a cheaper price. So patience is key. Patience is one of the hardest things in investing. Sometimes you just want to pull the trigger and you want to go crazy, and it's really difficult to sort of fight that urge sometimes. So yeah, just do that. Be patient, be steady, be vigilant, keep your eye on the stocks. And yeah, you know, hopefully guys, this is your time to shine. When there is a recession, you can pick up absolute bargains for fractions of the price, and you'll be very pleased in the long run. That is what I am going to do. Hopefully I've got some nice cash on the sidelines by then, for when this does happen. I think I made in one of my prediction videos not that long ago, we're probably, in my opinion, maybe going to hit a recession and a bit of a stock market crash. I think maybe late 2024 to maybe early 2025. But again, these things are almost impossible to predict. It could happen a lot sooner. For all I know, it could be next month and we get the official data roll in, or it could be 2 or 3 years away. So the key is you can't really time it. Just continue to deploy money into great stocks when you can. You know, take a bigger nibble. Anyway, guys, I hope you liked today's video. Please like, share, and subscribe. Help a new YouTuber out. Yeah, and thank you for watching. I will see you in the next video.